Welcome to Chit Chat Stocks. This is our weekly Power Hour episode. I am one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. And today we have tons of topics to get through. Apparently, the world is at a breaking point, I guess, with DeepSeek. So we're going to be talking about that. Is NVIDIA dead? That's what the people want to know. And of course, we're so technically proficient that we are the people to give some profound take on that. Not really, but we're going to get into it and we'll talk about what happened and if we actually have any thoughts on it. We've also got earnings season kicking off. We've got LVMH, Starbucks, ASML, American Express reported. So Brett's going to go through a bunch of those. We've got some fun discussion questions as well that I drafted up that I think will just kind of be a good revisit for ourselves to kind of look at our own investing careers. But I guess before I move on, Brett, welcome in.
Thank you, Ryan. Yeah, thank you for everyone that is listening today. Got a lot of fun stuff. Should also say, given all of the developments in the past week, we have a couple of Brett's Bubble Watch topics again. And it seems like people are enjoying that. And given that NVIDIA, I don't know if it's crashing today, but maybe we did jinx it by starting this segment, which was, fingers crossed, what I was trying to do.
Yeah. We also yeah, we also recorded an interview, a great interview on the progress at Nvidia over the last several years, which will be still timely despite all the price reactions that we've seen. Before we get into some of those topics, though, I want to talk about our friends at Public. If you are serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving. So you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured, US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks. Paid for by Public Investing. Full disclosures in the podcast description. Brett, where do you want to start?
Well, I don't know. People want us to talk about Nvidia, but there was also people saying everyone's talking about DeepSeek. I think let's just talk there. Let's start there. It seems to be something that has just taken over the market. You have some notes here, but it's even developing some of the news today, where it looks like I don't know if you remember the show Silicon Valley, but it seems like OpenAI might have gotten Jin Yanged and had their IP stolen.
Yeah. So let's actually go through what it is, what happened. I know we are not going to give some profound take on the implications of this and what companies will be most impacted. But I do think we can at least go through kind of the headlines and talk about if we have any thoughts on the companies that might be impacted. So, um, to start, I will say Ben Thompson from Stratechery. Everyone already reads him already, so I don't think he needs a shout out from us. But he had a, a good write up on this. And whenever there's something high tech that I don't understand, I usually go and check, and he's probably got something that helps understand it. But before I get into his writing, let me explain a little bit to the best of my abilities of what happened. So, some team of engineers based in China released a new version of their model. Deep, I think a lot of people think DeepSeek like came out this week, like just came out of the dark or something this week. They've been around for a little while, but they have a new model that's pretty comparable to the latest version of GPT 4.0, I believe, is what people were saying it's comparable to. And the big thing here is that they reportedly did all of this on less than a $6 million budget. For
Which is
reference,
incorrect. I mean, that's not true.
why do you think that?
From all the reporters that follow this, the guy that wrote the NVIDIA book, take him, the semiconductor analyst, the people that run the independent semiconductor and AI substacks, they seem to think that that was a bit misleading because it wasn't the full budget. It was some just small part of it. And yeah, it's also a Chinese company. They're not supposed to have chips. So they're
Well,
incentivized to
no,
say they
yeah.
don't have them.
So no, not in, yeah, maybe. There is Ben Thompson's notes. We'll talk through them here in a second, but there is I he makes the case that this actually makes more sense on the H800s, which uh they are allowed to have. So, but I'll go through them in a second. There, you are right. Yeah, I forget what it is, the inference or the training or whatever. That was the budget just for this. So, there's probably much more spending out there. There was some guy, and the clip went pretty viral. That was like on CNBC. That's like, no, they have 50,000 H100 GPUs. They're just hiding them and they won't say it. That does not. I don't think that's the case. From based on Ben Thompson doesn't
There's
seem to
no
think
proof
that's the
on that
case,
yet. Yeah.
and it makes sense. But just to kind of keep going here, the yes, everyone's saying it's BS essentially, and that they violated the Chips Act, and you can't do this without expensive NVIDIA GPUs. And before I mention some of the Ben Thompson quotes, I mentioned the H100 and the H800. Basically, look, I'm not the guy to like explain the differences, but from what I understand, H100s are the really advanced, expensive GPUs with extra memory bandwidth. H800s are not. They're a little less expensive and they are not illegal to buy in China. You can have them, you can buy them. It's not a violation of the CHIPS Act. Now, I'm just going to go through this quote from Ben Thompson. Basically, DeepSeek made these advances, and here's kind of his logic behind what happened. He says, DeepSeek actually programmed 20 of the 132 processing units on each H800 specifically to manage cross chip communications. This is actually impossible to do in CUDA. DeepSeek engineers had to drop down to PTX, a low level instruction set for NVIDIA's GPUs that is basically like assembly language. This is an insane level of optimization that only makes sense if you are using H800s. And then he says, so was this a violation of the chip ban? He says, nope, H100s were prohibited by the chip ban, but not H800s. Everyone assumed that training leading edge models required some more interchip memory bandwidth, but that is exactly what DeepSeek optimized both their model structure and infrastructure around. So, how did they do it? They apparently used a process called distillation. Uh, Distillation is, and I quote here, a means of extracting understanding from another model. You can send inputs to the teacher model and record the outputs and use that to train the student model. So basically, yes, they it was probably a breach of the terms of conditions for OpenAI and ChatGPT, but they trained on the foundation models that were ultra expensive to build and did so whether or not it was as low of cost as people said.
Well,
It
OpenAI just had the cost. I mean, if someone has to build it and they just
yeah,
stole it.
yes, whether or not DeepSeek spent as much money as they said, it was probably a significantly lower cost, and they used OpenAI to do it. So, what does this mean for all of your stocks? Uh, the answer is I have no idea, but I suspect this is my take. I suspect if someone can copycat the leading model for less than $10 million, or even say it was more than that, if they can copycat the leading model, the incentive to spend billions is a lot lower. So if you're NVIDIA, that's not great news. So
Maybe.
how?
It's illegal though. It's illegal. Like,
Yeah, it sounds like you can't really protect from people doing this though.
yeah,
If you're open source,
I mean, maybe you can not protect from someone doing this. You can just ban DeepSeek from being used in whatever country you operate in. But I think it's funny because OpenAI has been accused, and there's been some decent evidence that they, without authorization, used YouTube data and other Google data to train their own models, so it might be getting a taste of their own medicine here.
I
I
think
also
everyone
saw
is
today.
doing this to everyone else, just
Yeah, but they're
to
still
some degree.
training it, so I think that there is an IP theft here. Are there patents? Is there IP law? I don't know the exact laws, but I would assume if someone spends all their money building a very useful product, there should be protections around that, and I would guess in the United States, in places with these type of laws, that would be generally what, the historical precedent says. I also saw, though, and this is a very developing situation, so it could be changing what by the time people are listening to this, that the accuracy of DeepSeek is terrible. Not that the actual AI models have great accuracy nowadays. I think people really trust them more than they should. When I don't know if I would trust anything that doesn't have 99.9% accuracy, and maybe we get to there over time. But today, DeepSeek, I saw something, it was like 10 out of 11 in accuracy. I had like a 17% accuracy rate, but that's just a number I saw thrown around. Either way, if it's not 99%, I think perhaps okay, this moment might not mean that Nvidia spending or semiconductor spending immediately goes to zero, but my assumption is that if this is such a bottleneck, there are going to be, whether legally or not, there's going to be innovations worked on, like you said, and eventually people are going to find workarounds. If it's a $1 trillion bottleneck, people are going to try to innovate to beat that. And if the smartest people in the world are working on it, I wouldn't I would guess that they're going to make some progress over the next few years. I just don't know why someone owns Nvidia stock right now or is buying it, because you're paying up for an insane amount of uncertainty. This is like investing in internet stuff in 1995, and you're gonna pay up for that? I just don't. What? It makes 0 sense to me. 0.
So, I guess if you put yourself in the Satya Nadella seat, for example, and you allocated this quote unquote, he said, "I'm good for my 80 billion or whatever,"
Hey,
and
not yet though.
yeah, would you start? Let's say you saw this, and now I suspect DeepSeek will inspire some other people uh, to try to go this route. If that was the method they used and it worked, I'm sure other people or other engineers, other companies will try to employ this. Would you, if you're Satya Nadella, spend the same budget you were expecting for the leading edge model to really train it, to get all the GPUs, and kind of build the gold mine for everyone else?
I don't know. It's just not, it's uncertain. I don't think anyone knows the answer to this. Sam Altman doesn't know the answer to this. Satya Nadella doesn't know the answer to this. They are taking a big risk investing in this. I think it probably works out over the long term because at the end of the day, there one is going to be IP protection. Two, OpenAI is going to create some security thing to help stop this. I even saw they were working on this today. I will say, quite a week, or wait, second week to be starting as the AI and crypto czar for our favorite man, David Sachs. Seems like he's got quite a bit on his plate here, but that's something that, again, when you it comes back to a place with business rule of law versus, and this is the China. I'm bagging on the Chinese Communist Party, not the people here. There's nothing incentivizing people not to do that in China, and I don't think. Uh, I really don't think that it's going to like kill these AI budgets. I don't. Maybe they decrease it. Maybe this was the top. Maybe they timed it to do it right at the Project Stargate announcement. But someone has to build the data centers.
Yeah, it's and I guess you can't like if you're training off the other models, you can't ever really, I don't think, be the leader, right? Like DeepSeek, if they're training off OpenAI, can't ever,
And
I
they're
guess
going to be
replace
stopped.
OpenAI.
They will be stopped. Uh, it doesn't seem like it's they said they're working on a way to get around it. Maybe there will be hackers, but it's not something that I think is impossible to prevent from happening.
Yeah. Well, I guess this is all we can kind of wrap the segment there. Uh, I don't think this really affects most of big tech. This could potentially affect Nvidia. I don't think it affects most of big tech. Uh, I think long term for consumers, maybe it's a good thing to have a bunch of low cost models. I don't really know. Um,
I
I'm
got a low
still
cost model, Ryan. It's Google. I got a low cost model. I all I
no,
still
no,
just use Google, dude.
I know, but it
There
wasn't. That was not a low cost model.
well, it's I mean, on an I actually don't know what their costs are, but I would assume it's a low cost model when you query it.
No, I mean it was not low cost to build.
Oh, sure, sure.
So I'm saying like if the cost on all these things come down, and then all the companies that build on top of these that are more like point solutions, it could potentially lower costs for end consumers in some way. But
Yeah, that's
that's kind of
fair.
like
Or enterprise. Yeah.
yeah. Anyway, it's also earnings week, earnings season. I think it's officially today, I would say, is like Netflix always kind of gives us the feeling that earnings season is coming. And then there's like this kind of week where it's just dry and boring. But today it's heating back up. But I guess if you're listening to this on the podcast, we recorded this on Wednesday. So
Yeah.
Meta, Microsoft, Tesla are all reporting today.
You have any big predictions, Ryan?
I got a feeling we're going to see the word DeepSeek all over conference calls.
Yeah. Well, Tesla's a different story, but yeah, I feel like we're gonna see less certainty on CapEx budgets. We might go, well, we're thinking about 80 billion. We don't know. We'll see how it plays out.
Yeah,
The
that's fair.
conference calls are going to be market movers. I will say that.
Yeah. The predictions here. No, I've got nothing. I mean, no, like notable predictions. I don't think there's any company where I'm like they're gonna secretly outperform, and I'm the only one that knows it. Uh, but I do want to go kind of rapid fire through some earnings, so you can just say whether or not you actually saw these, and we can give some thoughts on it. Did you look at all at Starbucks?
Just a tad. I just saw they're cutting down on the total menu items. That's interesting. Their food I mean, well, I bet the new CEO came in and he just goes, "Wait, you're serving this food? Like, it looks like it's garbage." I mean, their food is terrible, but what did you see? Anything exciting there?
I think it's probably too soon to see what sort of an impact Brian Nichols going to have. But next quarter, they will officially be lapping like the negative volume. So I guess for context, I think transactions, comp transactions declined 6% year over year. Uh, price comparable, like average ticket, increased 3%. Basically, prices grew again, volumes declined, which has kind of been the moral of the story for Starbucks for the last, I guess, 4 quarters now. Next quarter, they will be lapping the bad transactions. So if they continue, then you're seeing bad transactions, like decreasing transactions on top of decreasing transactions. You need to see a real inflection upwards, I think, if you are going to have some belief that Starbucks is can turn things around, I should say. Um, but it seems like some of the steps Brian Nichol has taken seem good. Like the advertising is a lot more straightforward now. Very simple. They just show like drip coffee and how it's
Yeah,
harvested, all that. And
attractive
it's good.
people having a good time. Yeah, that's how all
Yeah.
commercials work.
They
Pretty
are
simple.
working to simplify the menu. They've taken out like the extra dairy charges and stuff like that. I will say
No homeless people in the bathroom in Seattle? Maybe we can get that one on the agenda list.
they did. Did you see
Doing
that?
a
You have to order
no,
something to
I
be in the bathroom now.
that's the good news. We don't want people doing fentanyl in the bathrooms. I think that's gonna drive volumes
Yeah,
away if I have any sort of hot take on that.
Yeah, and actually, for anyone who's not in a big metropolitan area that has this issue, that is a very real issue in a lot of, like, the big cities is, people know that Starbucks has clean bathrooms and that they're free for the most part. So this will probably attract more actual customers to come in
Yeah,
and
good.
maybe
Yeah.
not ruin the experience for some other people. Um, so that was, I would say, a step in the right direction. Uh,
What are
so
we
we'll
trading
see.
at? I've seen on FinChat here. Let me get to the overview. I'm seeing a PE of 30, 32. I'm still of the opinion that this is a wildly overrated business. What makes this a high quality business? Tell me.
Addictive
Why'd you get me
product.
excited? China?
I w- well, not to, at today's point. I think they're pretty much mature in the U.S. Although they say they can still expand store count quite a lot, but it is a very replicable model with good returns, I assume, on their average store that they average new store. So uh, there's been, I think the proof is kind of in the pudding in terms of why it's an attractive like concept, but uh,
Tell me why I should buy the stock
to attractive
today.
investment, I don't think that's the case. But attractive concept, like solid unit economics, yeah.
I
You
mean,
don't get to 30,000 stores without having attractive unit economics. But
well, Subway may beg to differ on that one.
hey, for a while they might have.
The $5
But yes,
footlong, and then inflation hit, and they're like, "Shoot, our whole concept is ruined."
it is that is such a funny case study because the f- even today, like if I go into a Subway, I see the footlong price and any sort of value deal that they advertise, my instant thought is like, well, that's not as valuable as the $5 footlong used to be. It was so good that it honestly was counterproductive for them. And maybe that's why, like, don't ever bank your franchise on like a value deal because when prices come up, people will always reference it. Anyways, okay,
Yeah,
yeah,
let's keep
Starbucks,
moving. More earnings.
not a lot to report there. Portillo's. I assume you checked out the earnings.
I actually haven't, I gotta say, but I assume
Okay.
they're fine
I think the
because the
stock
stock went up.
jumped. Yeah. How about
Did it?
LVMH? Did you take a look at that?
I saw that leather goods were down 1%, so I'm assuming volumes are pretty bad. I'm assuming East Asia and especially China is still really bad, but I figure they'll do fine over the long term. It's just such a big business. One thing though, and it's a tiny part of their business, I worry about Tiffany's because of the explosion in lab grown diamonds.
Yeah, I don't know how much of a contributor that is to the overall business, but
Well,
that
I
would
just
make
worried
sense.
over, yeah, it's small. I mean, it's really, if I remember correctly, researching the company when we did a show on them, I think a year and a half ago, it's really Louis Vuitton and Dior that drive most of the revenue.
Yeah, okay. I don't have the numbers right in front of me. I can pull them up. But let's say it trades at 20 times earnings. I don't know if that's the actual. Let me just do it on FinChat here. And for I will say for earnings season, if you want the quick numbers on pretty much everything, FinChat's incredible. Usually the
Yep,
segments
we
and
have.
KPIs are up in like 5 minutes.
They do a great job over there. Ryan knows he's really driving the team. No, he's not yelling at them to get those KPIs up. But yes, when we've seen some people sign up with our link, so we appreciate that. We've seen those commissions come through, and it's because you can get quite a bit of value, whether you're a professional or an individual with a good chunk of change in a savings account and you invest on your own. That is finchat.io/chitchat. Get 15% off any paid plan. All right, Ryan, what are those LVMH numbers?
EV to EBIT is like 19 times, roughly. Price to earnings 25 times. It let's let's just call it whatever. 20 times, slightly over 20 times earnings. However you want to I assume they have a big cash balance because of the EV. What do you think this works out from here?
Yes, but it's big. I don't think it does phenomenally well. But if I was for anyone listening, you can probably tell from our voices that we're not that old. Both of us are under 30, and I think if I was someone that was 50, this would be a perfect stock. I really thought it was a low risk opportunity, good management. Yes, there's the succession planning that could throw a wrench into the mix here, but these are high quality brands that'll do well over the long term. Is it going to be a massive compounder from here? I don't think so, but is it going to be very hard to lose money over a 10-year period? I think so. If that makes sense, Ryan.
Yeah, that makes sense. I wonder if this temporary slowdown is like all driven largely by China and it has presented just a good opportunity.
Yeah, given the reshoring, I think we're gonna take that out and bring it to Latin America, and I think people are gonna like those. They like luxury products travel everywhere, so I think, maybe we'll see some upticks in other markets.
So everything is bullish for Mexico.
Yeah, maybe, maybe. We got
Well,
some
let
comment
me
here that says that, I guess this is regarding Starbucks. They said that's the authentic Starbucks experience, though. Yeah, well, maybe in a video, but when you experience it in person, that can really ruin the brand quality when you see someone doing drugs in the bathroom. And someone says, any thoughts on Celsius continued struggles? So it looks pretty cheap here. My number's a little bit lower. And then I checked Portillo's, Ryan. Stock was up. I don't think the earnings came through unless I didn't get that email update.
the like the earnings report.
I don't think, yeah, unless
I,
I'm missing it on their IR page
I
here.
do I do think they reported earnings. The I will say,
Portillo,
e-
I'm not seeing a press release,
really
but someone must have upgraded the stock because it rips this week.
KPIs were updated. But the
So we got
not
something
sure
to
what's
work
happening.
on for the FinChat team.
The
Yeah.
no, I thought I saw some earnings numbers. The maybe they did like a preliminary or something.
They did
The
do preliminary at a conference. Yes, it was just like a couple numbers that you guys probably put in there. Yeah, that is correct. I did see though someone said Chili's 30% comp sales. I think that's my indicator for the low to middle income consumer is in a great spot.
yeah,
American Express is for my wealthy consumer indicator. Chili's, that's my middle class. Spending's still good. Consumer balance sheets are strong.
yeah. If
30%?
Chili's comp sales, yeah, I guess that is kind of a nice indication for the middle
Middle
income
class, yeah.
consumer. Let's maybe touch on some other ones here. ASML. Do you have any thoughts?
Yeah, I got some numbers here for you too. Bookings 7 billion euros this quarter, which is like customer orders versus only 2.6 billion last quarter, and the stock fell on that 2.6 billion euros last quarter because it was a big slowdown. So we saw a recovery there, which is a good sign. Net income of just 7.5 billion euros in 2024, which is actually down from 2023. So the semiconductor capital equipment companies are not doing as well as the headline numbers might suggest if you're just following that AI narrative. But they are expecting a solid jump to 30 to 35 billion euros in revenue this year. I'm not sure what the valuation is at the moment, but are my gut feeling says this is just a slower growth business and yes, durable, but maybe a slower growth business than we think.
Yeah, I think this is probably just one of the lumpiest businesses around. But- and it is, yeah, I don't think it's going to be a hyper growth type thing where you're seeing significant, like it's not going to be 20% plus revenue growth, I would suspect annually over the next 10 years. But there's the valuation has taken a knock.
Yeah,
There
what are we
is,
at? I know PE is just quoting a PE is not, yeah, I don't know, can be misleading, but I'm seeing 37.
yeah, I kind of just don't have a hot take like on ASML. Look, seems very hard to disrupt or replace, or I guess repeat, I should say. Like it's hard to repeat the tech. So it'll always be in demand. There are new new orders on their lithography systems hit an all-time high this quarter. But it's like these machines are huge, they're very costly. Bookings are going to be super lumpy. Over time, it should probably work out, but it trades at a bit of a premium valuation, and I don't think growth is going to be insane. So it just, I don't know. It's kind of like LVMH for me. It's big. People know it's a good business. I kind of just am not that interested.
Yeah, I think returns will be fine, but I I just am not attracted to stuff where I'm betting the multiple is gonna continue to stay high. Just not the game I like to play.
Okay, we're about halfway into our power hour here. So I do want to mention one of our sponsors, Blue Chippers. Uh, there was a meeting this week, and a whole bunch of people have joined from Chit Chat Stocks. So I commend you for doing that, and I appreciate you for looking at them. For anyone that doesn't know, uh, Blue Chippers Club is a new sponsor here on Chit Chat Stocks. This was recently started by two friends of ours with the goal of building a tight knit community of stock focused investors. Inside the community, you can share, break down your portfolios, pitch stocks, receive feedback, and participate in weekly calls. It's really just a nice place to kind of build a real network of like minded investors. So I really do recommend checking it out. If you're interested in joining, head on over to bluechippersclub.com and hit apply. It is literally free to join. There's no there's no charge here. So go ahead, check it out. The link will also be in the description. We should also mention our friends at Public. Again, if you are serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered, SIPC insured that platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chit-chat-stocks, paid for by Public Investing. Full disclosures in the podcast description.
Just looked up the bond account, 6.7% yield as of this recording, obviously subject to change given on prices, stuff like that. And I have a topic here, Ryan, that might show that there potentially should be more interest in a product like this, given where stocks are trading. Do we want to do the bubble watch and maybe this equity risk premium one before we hit small cap of the week?
Yeah, let's do Bubble Watch. Anecdotally, I've heard some people saying they really like your Bubble Watch topics.
Good,
Had some
good.
people chime in, say they enjoyed it. So, what do we have this week?
Yeah, well, there update on the roommate. Apparently, there's a coin that's called Brett coin. So he likes that one since it's
Don't
my
act like
name, but it
don't act like you
hasn't
don't know
done very
anything
well.
about that.
Yeah, I didn't start it, but it apparently hasn't been doing too well, and I guess the meme coins might be potentially hitting a peak. But we have one here from Jack Rains. I think he's a writer of what's that newsletter called? But good guy that does a lot of finance and personal finance and kind of psychology topics. And he had a tweet. Apparently, the newest Bachelor, which that show is going strong. That thing's been lasting a long time. Didn't know it was still cooking along here. The newest Bachelor is a quote day trader, and the day the season premiered is when Nvidia fell 17%. He said the top might be in. And from a quote from his what is it, bio from probably some Vanity Fair thing. He says after his professional basketball career ended, Ellis started working as a day trader. Quote, S&P 500. That's the only instrument I trade. I studied and went all in, he said in August 2024 episode of The Vile Files. That I
Oh
think
my
encapsulates a
gosh.
lot of what we've been seeing out there anecdotally.
It's yeah. My favorite thing is I did some research. I studied it. I read
Yeah.
it. I read the situation, went all in. It's like, all right, I think it takes well, maybe the returns have been good, but I think it takes a little more than that. I also
The micro strategy, that's what it reminded me of, is when they're like, "We studied micro strategy." I was like, "Yeah, I studied it. It took about 5 minutes to understand what they were doing." And then they're like, "Most people don't understand what's going on here." Yeah, man, that they don't understand?
Yeah,
I think you're
the
just taking a lot of risk.
yeah, that that's once everyone starts day trading as a profession, well, maybe even as a hobby, it's usually a concerning sign.
And
Uh,
that leads to my equity risk premium one, which is, I guess, a separate topic, but also part of the bubble watch, which I'll hit after this. But I wanted to talk about this meme. I don't know if you saw this, but the meme account Mads Capital posted a revised version of Buffett's "Buy American I Am," but after DeepSeek came out, he said "Buy Chinese I Am," and he revised it as a joke. But he got community noted, and in the community note, the whoever made it said, "This is a fake image, Warren Buffett, but spelled Ryan, it's a disease, it's a pandemic, spelled buffet," in the community note. I would like to community note this community note. They said it twice, and they're calling him buffet. So, yeah, I would like to request a community note on that one.
the yeah, we should tell. By the way, Mads Capital is an incredible meme account for financial memes if you like them. Um, but the yeah, you should tell him to respond to the community notes there. It's it's a plague. It's a
It is a plague.
disease.
It's an epidemic. We need to. I even saw it at Somali Fool once. I think maybe messaged our like internal Slack and said, "Hey guys, PSA. That's two T's. Two T's. Remember that. It's one thing you want to remember. Two T's."
This will be
Um,
yeah. The one thing, the hill you die on is Buffett with 2 T's. The all right, any other bubble watch, indicators for you?
yeah, I know I'm all over the place, but we saw something from Brian Armstrong, CEO of Coinbase, founder and CEO, said that he wants a revised listing process for tokens because there are, and I was astonished, there are 1 million new crypto tokens created every week. So a million new meme coins are getting created every week. I'm assuming getting help with AI or automated tools. Can we go China on this one and just kill the industry? I'm sick of it. It's such a waste of time.
Yeah, and it's just think about that, like, to anyone that's like, "No, this one's different." There are a million created each week. It probably takes, like, a day to build one and launch one.
we're we're creating Ryan coin. I think we're gonna launch that one soon.
Yeah, sure. This I bet it's
There's
out
probably
there,
already
to be
20
honest.
Ryan coins.
Yeah. Okay. Let's I wanna talk my small cap of the week, kind of an interesting company, a big change of pace here, not the kinda company we not at all what we've been talking about today. And then I've got some questions for you. You can take a look at them at the top there too, Brett, if you want, so you can be prepared. But this week's small cap of the week, presented by Yellow Brick Investing, is Cakebox. Let me also say I found this write up on Yellow Brick. I literally just searched write ups or stock pitches that are less than $1 billion in market cap, scrolled through a couple and found a really good Substack called Alex of Rome Capital. I think he's a young emerging manager who uh, runs a pretty good Substack. And the company Cakebox is the leading cake shop chain in the UK with approximately 250 stores compared to just 20 to 30 stores for its closest competitors. Operating under a franchise model, Cakebox manages its network exceptionally well. This model enables the company to remain capital light, highly profitable, and scalable. So the company is based in the UK, as it mentioned there. They have a 74 million British pound market cap. For context, that's like 90 million USD. They plan to open 20 to 30 stores a year, and their numbers actually look pretty good. Revenue has compounded at 25.5% annually since 2016. They're pretty profitable, although apparently they've been investing in internal systems, uh, which has kind of reduced profitability a bit, but still, $7 million in I think it's 7 million pounds actually, in operating income over the last 12 months. So I think the EV to true earnings over the last 12 months is like 14 times. So pretty attractive valuation. Uh, I think this probably goes under most people's radars for obvious reasons. It's a cake store in the UK. I think analysts probably just aren't focused on it.
And what did you
But
say? Market cap of under 100 million? Yeah.
yeah, and here's a quote from the write up we found on Yellow Brick. It says the author of this blog believe or sorry he says Cakebox is now poised to pull the operating lever, having completed its investments in central functions and entering a new growth phase. As a result, we estimate Cakebox can deliver 20% plus net profit growth over the next few years. The part I like here, 5% dividend yield currently. They have grown the dividend pretty consistently. So I do think you're potentially getting high dividend payer plus true growth. And I would assume an industry where there aren't a whole lot of like big competitors. I imagine most of the cake
Right.
stores
The
are kind of,
hamburgers, yeah.
yeah, mom and pop shops kind of thing.
Bakeries, yeah.
So for some reason, I don't invest in a whole lot of UK stocks. I don't know what deters me, but this one's actually I find this pretty interesting. Any thoughts here?
Yeah, I think they should bring it over to the United States, get those Costco, I don't wanna disrespect them, those Costco people, to do some reviews, they'd love it. This thing would work great in the US. But more seriously, I think that this is the type of concept they talk about pulling the operating lever. This is something that could have really good unit economics if you have high volumes, because I doubt you need um, that many employees compared to, for example, a regular restaurant like even a McDonald's or Portillo's. I guess always comes to mind for me. And your ingredients, except for maybe eggs, which I think generally actually aren't that cheap, but we just had that weird fluctuation recently. I think generally you have pretty cheap ingredients similar to like a Domino's, which could be, hey, if you got any similarities to the cost concept or the cost structure of a Domino's, that makes a lot of sense to me. Yeah, it could be interesting.
Yeah.
I'd like to see what management has to say. Given how small they are, I think they'd probably talk to individual investors. So if you're someone that's researching this, just call them up. They'll probably talk to you.
Yeah, I would assume you don't need too much in the way of equipment or that much in terms of systems in those stores. You need four walls, some frosting, and some batter, and probably an oven. It seems like the economics could be pretty good. And if you're a baker and this is the kind of thing you like, but you don't really want to just purely have the business side, maybe you want to partner in the process, that kind of thing. This is probably, I imagine, attracts some franchisees pretty easily. Um, Yeah, I don't know. Interesting. Found it on Yellow Brick. For anyone that doesn't know, one of the easiest, best places to find high quality stock pitches. They aggregate them from all over fund letters, Substacks, blogs, podcasts, bring them all to you in a single place. So go ahead, check them out. You can use our code FinChat, or sorry, not FinChat, Yellowbrick. Join yellowbrick.com/chit chat to get a discount on any paid plans. The link will be in the show notes. Okay, the question to you, Brett. What is one stock that did not meet your expectations? Surprise to the downside. And what lessons did you take away from it? We've got a follow-up here, which is the
Just in
opposite.
general, just
Yeah.
like any, not like this quarter.
Yeah, in general, but I mean more so business performance. The business did not perform the way you were expecting and why.
Match group, and that's because I overestimated the runway for growth and I underestimated the importance of innovation at Tinder and the fact that they rested on their laurels with the original innovation in the swipe left and swipe right concept, and they didn't really change much. Yeah, we got a comment that says match from Tyler. Yeah, we're speaking on the same wavelength there. Yeah, I'd say that's one. And we talked about them ad nauseum, but I think it's pretty clear why that happened. It's understandable, and cutting bait now, maybe it does well. We talked Bumble last week. Maybe Match Group, Bumble, and Grinder are good performers over the next 5 years. I think that's possible, but I don't like Match Group's management, and yeah, you can see why, despite them growing very rapidly with Hinge, given the user numbers on Tinder and what they finally disclosed, didn't work out.
Okay, what is one stock? Yeah, and that makes sense. I think that's an underappreciated aspect of a lot of network effect businesses in general. Like, you can't just, okay, great, you've got a network effect. We don't have to innovate. We can keep the
Can't ruin the
platform.
top of funnel. Yeah,
Yeah, keep the platform as is. Doesn't really work. You got to really nurture that network effect, which Tinder just outright did not do. And they're still not doing it. They talk about some of these AI initiatives that are completely worthless, totally worthless. And it's, uh, I'm not going to get into it, but yeah, they did not. That's a perfect example of not nurturing a network effect. Second question: what is one stock that surprised to the upside for you? And by surprise to the upside, I mean
the business.
business performed better than you expected. And any lessons?
Philip Morris International, and that is on the new age products. I guess you can lead back to the merger with Swedish Match, but I thought that Zyn nicotine pouches would be a solid growth category, but the numbers they surpassed my expectations quarter after quarter, and I had to revise what my expectations were in a good way. And we could go from this being 20, if you include ICOS, like you include not just the nicotine pouches, what I thought could be about 20 to 25% of their profits on a consolidated basis. We could see this become, if the growth continues, maybe this is the near term top and maybe growth is going to slow down. But if growth continues, we could see this become half of their profits within 5 years.
Yeah, that one, I agree with that one. I guess we kind of both experienced those. I believe you're a
That's
PM,
true. Yeah.
for Philip
Yeah.
Morris investor. Uh,
What about
okay.
you? You have anything? You came up with these questions.
For the downside, I would say Nintendo did not. Now things can change, but I overestimated how I thought they just like basically would be out of the cycle, like no longer be cyclical whatsoever. And or maybe I should say I underestimated how much of a pull forward in hardware demand there was from COVID and the Switch.
And you underestimated the yen and how annoying that
True,
can be.
that too. Um, and it's not that it can't end up being a good performer from here, because who knows, the Switch 2 could, kind of raise the bar once again, as I think you expect it to do. But yeah, I overestimated, I guess, their ability to continue generating hardware sales.
The ADR is over $16, Ryan. The path to 30, the progress bar, it keeps getting higher. So we'll see. We'll see. Lot of ways to go, and we'll see what happens this year. But yes, I'm still optimistic.
In
Someone
terms,
mentioned Spotify
yeah,
as better than expected. I don't know if that's what you were going to choose.
yeah, it probably would be. I would say either Amazon. Amazon got
Mm,
much more
yeah.
profitable much quicker than I was expecting, but Spotify, I never, and I actually sold them for this reason. I did not think, without the help of like podcasting becoming a really big business, I did not think they could get to 10% plus operating margins. It
And then they just decided to.
Yeah, and then they literally, it seems they decided to on a whim. It just goes to show how much some of these big VC backed, like, companies that have all the notoriety and sort of fame coming into the public markets to begin with, how much bloat there might be, um, and how much maybe redundancy, how much bureaucracy there might be to some degree, and just really just probably too much people because, frankly, the margin expansion was pretty much tied at the hip with the headcount retraction. So,
Yeah, and the businesses growth didn't change. It didn't even affect R&D that much. I think the lesson we can take, Ryan, is that if you are if part of your thesis is operating margin expansion or just profit margin expansion, and you have some good conviction that can happen, seems like the market can underrate that time and time again.
yeah, I'd say my lesson there is if you have a platform that's like truly valuable to a lot of people and revenue is growing, like if you have a best in class product that's sticky and the top line looks good, you can figure out the bottom line. Like most of those companies can. It might take them a while to figure it out, but eventually the pressure will get put on them and they'll do it. And we saw that with Salesforce, we saw that with Spotify, saw that with even Meta to some degree, Amazon a little bit. Basically, when the stock starts performing poorly, the pressure to get profitable comes quick, and that people can change sort of their philosophy and ideals and how much they're looking to invest in growth, quote unquote, which is oftentimes more headcount than they need in sort of empire building. Um, they can change that pretty quick. So that was probably my takeaway. We've got a little bit of time left here. Do you want to go through American Express earnings?
Sure, yeah. My barometer for the health of the, I guess, upper end of the economy. 9% revenue growth year over year, an acceleration to 8% billings growth, which is essentially just card volume. Net write off rates on their loans for credit cards are still below pandemic levels, so no hurting there. Fee growth on their credit cards growing 18% year over year, probably the most attractive part of their business right now. And as a little tease, it's been, I think, 4 years now since they upgraded the platinum card fee, and they'll probably be doing that in 2025, so that could be another step change in growth there. A great company, one that a year I it's done really well over the past year and a half. It seems to me, Ryan, that the United States economy keeps doing well. I saw this from, Bill, who is an anonymous account on X/Twitter at @WaBuffo, says the Atlanta Fed GDP, their estimate for Q4 2024 has now been revised up to 3.2% growth. And we've seen an acceleration. The previous one, like at the end of 2024, was 2.5%. Seems like things are going fine. Do you remember when 2 years ago executives were talking like a recession was guaranteed?
Yes.
Crazy.
Yeah, it seemed like it, I guess, but that was at the point when, like, it had already been baked into prices. Um, yeah, and people thought inflation would kinda go on forever, that it was just the beginning. Now, there was still some weakness at the lower end of consumers over the last couple of years.
Yeah, Ally, Discover. They're doing fine, but they're not doing terribly. Say middle of the pack.
The average fee per card for American Express, that is a beautiful chart. It's basically doubled over the last 5 years. People are paying, let's make sure I'm getting this figure right. They are paying now $108 per quarter on average to have an American.
Million new card members per quarter. Yeah, not bad. Not a bad business, especially when you consider, I think they've doubled their international acceptance over the last 3 years, and they still have plenty of room to grow there. If they can figure that part out, the moat can expand quite a bit. There's a reason it's Buffett still hasn't sold at Berkshire, and there's a reason it's probably if he sells more of Apple, which I think he probably will, given the fact that usually when Buffett sells, he sells the whole thing. Uh, this is going to be I think his longest term holding besides Coca-Cola, or maybe even longer, and it'll be his largest position. And it's been a 100 bagger for him since his initial purchase, including if you do it on a total shareholder return basis.
The couple other companies that reported earnings, ADP. I know no one cares about this, but I did not realize ADP still grows revenues in the high single digit percentages every year. When I hear ADP, without even like having looked at the business at all, I just think like archaic technology. And
Yeah, well, it's a 1,000 bagger. No, 100 bagger.
it's, yeah, so still growing revenues, high single digits. They were founded, I did not realize this, in 1949. Now, back then it was probably just like payroll services, but now it's more software. This space is probably one of the most competitive spaces within software generally. HR, payroll software. So this that's got to be a testament to the ADP switching costs because there's no way that they are like the easiest to use.
Yeah, I think it's a testament to the industry quality.
Yeah. The other one I wanted to mention, Nasdaq, which people whenever people hear Nasdaq, they tend to think of like the indices. The company, they reported 66 new IPOs this quarter, more than double last year. Is the IPO market officially back?
Well, I guess it bottomed, but it's not back. We had 1,000 right in 2020 and 2021. I think if you kind of do back half of 2020, first half of 2021. So no, it's not back yet.
Okay. All right. Last thing I wanted to do too, I forgot to put this down, but I had an anecdotal evidence from this week. I went to Costco and it's
In
not,
Texas, for anyone that doesn't know, Ryan's
yes.
in Austin now. I know you had some people contact you, but anyone
Yeah,
that didn't listen last week, FinTwit people or listeners, hit him up. He's looking for some investing friends down there.
I am. The thing I noticed, Celsius was, you know, they're kind of displayed back in that energy drink area. But right next to them, Alani New, and this basically kind of the same sort of presentation, Zoa, right next to them as well. That to me is sort of the concern. If you dominate the convenience stores as an energy drink, you're probably going to be a wonderful business. Like it's going to be, you're going to be just fine. I think Monster's a great example of that. But I think Costco really helps raise awareness for some of these upstart type energy drink brands, and you're seeing it in some of the market share data. Now, that doesn't mean it's very profitable for those companies, but if they hear about them in Costco, they try Alani New, whatever. Maybe it's slightly lower cost than Celsius. It's right next to it. It is there some? I guess I just have some concerns about the competitive positioning of Celsius long term.
Yeah, I can see some of that. I understand some of that, but convenience stores, I mean, what there was what are the older energy drinks? Rockstar, what is it, C40, what are some of the other those were next to Monsters at convenience stores. I think what's important, and it's unclear to me whether they're going to do it or not, is if Celsius can become the go-to modern Gatorade or Powerade. Maybe there's room for both two winners there where you have this association with health and fitness and athletics. I think that's what they have to do because Gatorade and Powerade were very replicable, but they had that branding quality, the advertising quality. And we'll see if Celsius can do that. I think they're doing some good things with that, signing up athletes, things like that. But yeah, given that risk, given the competitive set in sugar free energy drinks, I think you want a discount for Celsius when you buy. I typed in the chat here to someone asking a question about that. My number is $23 is where I'm kind of going to compare it to some existing holdings. I think that's fairly cheap. So we're pretty close. Like we've talked before, how we're getting closer. We're getting closer. I'd say I'm pretty close to being my buy number because I think the upside, if you're right about this one, you got a long runway to grow.
Yeah, and I actually am looking at the numbers now. This is not something that's reported every quarter, but Costco only accounts for 15% of Celsius's revenue. I would have
Amazon, I
expected
think,
that.
might be higher. Yeah.
Let me check. By the way, they have these numbers on FinChat, so shout out. The Amazon accounts for 10% as of the
Okay.
latest
Okay.
quarter.
Still high, but
Everything's
not as high.
changed. I mean, Pepsi accounts for 47% just because they're the distribution partner now.
Mhm. Yeah,
So
it could
that's,
work.
yeah, that's better than I expected.
I wanna hit this risk premium one before we get out of here, Ryan. There's some interesting quotes here that I think are classic indicators that not that the top is in now anytime soon, but that people should be careful and that when everyone's chasing these things, it is best to stay conservative. We had someone typing in here today that the tobacco basket is doing well. Yes, the conservative low, like it's time to be conservative, I think, from an investing perspective. And it was an article from the Wall Street Journal this week and how this is the first time since the dot com bubble that the extra reward for owning stocks over bonds has disappeared. So the earnings yield, which is the inverse of the PE, is lower than the yield you can get on. I think they probably used the 10-year treasury. And they had some quotes from this article. I'm going to say the person's name because they allowed themselves to be in the Wall Street Journal. So it's not like we're outing anyone here. And here's the quote. I think you get what you pay for, said Mike Gugino, a 73-year-old retired surgeon in Columbia, South Carolina. South Carolina. High valuations haven't deterred him from scooping up more shares of Robinhood, Nvidia, and Intuitive Surgical in recent weeks. Despite his age, Gugino keeps more than 80% of his portfolio in equities and said he believes tech stocks, including Tesla and Meta, can keep powering double-digit percentage gains in major stock market indexes in 2025. Another one here. Despite being a former bond trader, Robin Davis Wilson keeps the entirety of her $1.7 million portfolio in the stock market. Big tech stocks comprise about 60% of her investments. That's almost an anomaly for someone my age to be that aggressive. I'm a big believer in these stocks. I think there's people that just think these companies are can't lose. That's dangerous. I don't understand someone with a big portfolio saying, how is your quality of life going to improve if you're 75 years old and you have a bunch of these things? Like, if you kind of get what I'm saying?
Hey, I will say to this 73-year-old, to I don't necessarily wanna stop, like, investing in businesses I think have long-term potential just because 'cause I'm getting old. So, I now, there is some degree of portfolio management. Make sure you have enough cash to, like, live on in case things do go poorly. But, yeah, look, the other part is, look, they own these equities outright. This guy does, and it sounds like the other what's her name? Robin Wilson
I
does as
guess it's
well.
better than index funds. Is that what you're
It
about
would
to
it
say?
be any different? Would it
Yeah.
really be a whole lot different than just owning the index? Which probably the majority of retirees, I assume that accounts for the majority of their retirements.
I think for me, I think indexes are worse. Maybe not Tesla. I think it's a high that's high risk and an extreme valuation. But I can lock in 10-year treasuries as a 75-year-old at 4.5%. Maybe, I know it kinda changed wildly this week, or I can buy into the S&P at a 31 times PE, and we're betting essentially that a recession won't occur over the next decade. Like, is that the
Yeah.
bet you really wanna make?
No,
I just don't
obviously,
get it.
I think there are better returns elsewhere, but I don't knock them for keeping kind of the long-term mindset just because they get old. I think it's
Sure, yeah.
boring intellectually to just say, "Okay, I'm 60, here come the bonds." Like, just so boring.
Well, if that's what you want, yeah, but I think I could do that with a small part of my portfolio, and you can still have the intellectual pursuit and the competition with yourself or whoever. If I'm going to beat the market or beat this benchmark, whatever my benchmark is, you still have your life to live.
True,
Maybe that's a whole
true.
that's a whole nother conversation. All right, we're going long. I'll hit the disclosure for us. Thank you for everyone who listened. We do these live every Wednesday, 1:30 p.m. Eastern Time. You can join on the Chit Chat Stocks podcast YouTube page. You can listen to the replay on YouTube, Spotify, Apple Podcasts, wherever you get your podcasts, and give us a review on Apple or Spotify. Best way to help grow the show, preferably 5 stars. We've seen some people do that. Thank you to all our sponsors, FinChat, Blue Chippers, Yellow Brick Investing, and Public. As a reminder, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in, and we'll see you next week. All
All
right.
right.
I think that was a good one.